be.
Jerome Powell. Oh,
What's up, fellas?
It's Aaron Dillon, everyone.
there he is.
Of
Hey,
Aaron Dillon and Co. Aaron is our favorite IPO specialist, and that's where we want to open the show. Some recent data makes it clear that we are back in a healthy IPO environment. Aaron specializes in companies before they come public, getting investors access to them, understanding them, analyzing them, conveying information about them. So we're so excited to have Aaron here tonight. Aaron, did you know that according to Renaissance, there have been 82 IPOs priced so far this year? That is a 37% change from the prior year. Did you know that? Do we have that table?
I've seen some stats, yes.
Okay.
It's good. It's up.
It's up, and business is getting done again. I guess the table with the yellow bars, if you guys could pop that. So, it's not like a barn burning or anything, but it's some activity, it's some light and some heat, right?
That's right.
Also wanted to share with you the Renaissance IPO Index, which we also have a chart of, is up on the year. It's not up as much as the S&P, but it's also not down. And this is a sign that recent IPOs are holding their price.
Right.
And, of course, this is the main condition necessary for other companies to want to come public. If everything that comes public just drops like a bomb, no one's coming out. So we have things moving in the right direction, and we're about to raw dog ourselves maybe another 80, 90 IPOs in the second half of the year. What do you think about that?
Let's do it. Yeah, I mean, it looks better out there, that's for sure.
So I wanted to ask you what you see on your radar right now as somebody who is deeply involved in companies that are on the runway.
Yeah, so I think there's several we're looking strong, as you said. That said, there's no blockbuster IPOs, right? The biggest one that I'm seeing, Josh, is Shein, right? Which is going to go in London, so it doesn't really help us here if you're a U.S. investor. But that's the fast fashion company that looks like it's going to go at $66 billion valuation. That's
time
big,
out.
right?
What the hell is fast fashion?
Like Zara or H&M. It's companies that they see a trend on TikTok or Instagram. They have it in the stores 2 days later.
You got it.
And
That's
it's it's like disposable clothing, very
Like
terrible
Uniqlo.
for the environment. Yeah, it's not. Uniqlo might even be higher quality. This is like a $9 skirt or a $25 sweater. It was trending on Monday. They have it in the stores by Wednesday, and it'll be replaced very quickly with whatever's next. So Zara is probably the best example of this, or H&M, which is Nordic, and then Shein is China's version of that.
Aaron, I know you mentioned that this one is going to be listed in London, but perhaps the best barometer or metric of IPO activity is the NASDAQ, the equity. Josh has been talking about this for a while now. NDAQ, another 52-week high. Stock looks really good.
Yeah, I mean, things are holding up. I mean, just looking at, Josh mentioned earlier, like IPOs holding up, just to name a few. So Astera Labs was one that came out earlier this year. That's up 17% since the IPO. Reddit is up 70%. Tempest AI which is another big one. That's up 26%.
I should have bought Reddit.
They're holding in there.
I knew. I
You
should have
didn't
bought.
know shit. Roll
I
the
did.
tape. Roll the tape. You didn't know shit. Birkenstock looks pretty good. Really good, actually.
You mentioned that. Well, first of all, let's get into some of these stats here. So 82 IPOs through July. That would annualize to like 142 full year. So in 2019, as a reference point, the last pre-pandemic year, we did 163. And I think people thought of that as normal. So 23 billion raised so far. Last week was the biggest IPO of the year. We talked about it. Lineage, which is cold storage REIT, but whatever. It was a $20 billion company. Let's get into some of Aaron's charts here. So walk us through what we're looking at, these visuals.
So this is the total amount of capital raised, right, per year. So before we were looking at the number of IPOs, this is the capital raised. So these numbers look even better than the number. I mean, we're going to get very close.
This is the number of deals actually in front of us right now.
Oh, I'm sorry. Number of deals. Yeah, and then the next chart's the total capital raised. So 40 billion is what we're looking at analyzed this year.
All right. So we're halfway through the year, and these other years are full years.
That's right. I mean, Josh, you look at these two charts. I think what's interesting is maybe some of this stuff got pulled forward into 2020 and 2021, right? Those were good years, and everyone pulled it forward. So that's why the last 2 years maybe not so.
Aaron, in the movie industry,
Michael,
they're saying their motto is like stay alive till 25.
Yeah.
Is that sort of similar to the IPO market? Because we've got a lot of big ones that are trying to come public.
Listen, there are a lot of pre-IPO stocks, Michael, very attractive companies, I think, that are still private. I don't know if they're going to go public anytime soon, to be quite honest.
Let's throw this
There's a
table up.
number of reasons
Let's
of
go
that.
through some of these. Let's go through some of these. So your top 10, ByteDance, which is TikTok, SpaceX, OpenAI, Stripe. Stripe's been on this list, I feel like, for half of my adult life.
Yeah.
Databricks, Revolut, Canva, XAI, Anthropic, and then CoreWeave.
Right.
So
There's a theme on this list.
the theme is AI.
Yeah. Yep.
I mean, XAI is Elon Musk's AI, and then he's also on here with SpaceX, which is the second largest, 210 billion. They think TikTok's worth 293 billion. I think it might be. What do you think is the most likely of this top 10 list to be getting ready to do something in the second half of this year?
Zero.
Wow. So what's the reason for that?
They can raise a lot of money, Josh, in the private market, like no problem. The amount of capital that's being raised in the private markets and the speed in which it's coming at these companies is, I haven't seen anything like this in my 20-year career.
All right, so how do those investors find an exit? How do they get liquidity? The money that's coming in today.
Yeah, so they either hang in there for the IPO or the secondary market's liquid, Michael, in the private stock space. So they can buy in the secondary and sell in the secondary too before the thing even goes public.
These days, it's almost like being quasi-public to be, through like a Series B or C and just be sitting there. You almost like you can get liquidity for your shareholders. You can report earnings as though you already were public, sharing as much or as little detail as you want, quite frankly. What is the contingency, though? You just have to stay below a certain number of investors? Is that the only constraint here?
I believe it's 2,500, but Josh, like if you're a venture capital fund, that's one investor on the company's cap table, and they can have, depending on the type of fund it is, if it's a QP fund, it could be 2,500. If it's a accredited investor fund, you have 99, and of course there's layers on top of that.
So there could be thousands of end investors.
Tens of thousands.
What are all these tenders? And walk us through some of the pre-IPO tenders and primary raises. This is part of the mechanism by which these companies stay private longer.
That's right. So just to lay a foundation, what's happening, and XAI is an interesting case. These guys raised $6 billion in 4 months' time through venture capital funds, not investment banks, and venture capital funds, right? So 41 venture capital funds came in. Then there were layers of venture capital funds that came into those funds. So there's this entire ecosystem that comes in, right? So that's what happens with these tenders as well. So a company like Stripe just did a tender, right? Or Canva is a good example. $1 billion tender in January. They raised $1 billion in 3 months. Venture capital firms came in, other funds came into those, and it's all high net worth, RIAs, broker dealers, small institutions.
This is what I'm trying to understand. Who is selling stock on the tender? Is the company raising money, or are these earlier investors just getting out, or is it a combination?
It's a combination. So sometimes you see just employees and existing investors, and the company's kind of controlling that tender, right? The valuation, who's participating, at least directly on the cap table with the company. And then, other times the company needs to raise capital too. So it's a little bit of everything.
How much visibility do these investors get into what's going on inside the company?
So the folks coming into the venture capital funds that are directly participating with the company almost get no transparency.
Right. But I'm talking
There's
about the venture investors, the people that are actually making the decision to invest.
Yeah, full data rights, right? But Michael, what would normally happen, if you imagine what this happens, it's almost like an auction. So you're the CFO of Canva, right? You need to raise $1 billion. So you go out to your VCs that are already investing to you. You say, who wants shares? I'm selling $1 billion worth. People put their hand up and take a tranche. And then they turn around and got to raise that money. So they go to other venture capital firms or existing LPs that they have and say, look, we're going into Canva. I got a $100 million slug. Who wants some? Right? And then this process starts. And in 90 days, they raise $1 billion.
You mean this pyramid starts?
Well, Aaron, is it conceivable that we could have a generation of companies that go public after having cycled through multiple generations of investors in the private market? And if so, these are companies
100%.
presumably they want to come out at $10 billion valuation plus. Like otherwise, why would you wait this long if not for that
Yeah.
outcome? Okay. So
Yeah. So I mean, so there's ample liquidity. Yeah. Go ahead, Josh. Go ahead.
no. Well, so the follow-on thought is, if investors want to capitalize on the earlier stages of these companies' growth stories, they basically have no choice other than to have a pre-IPO sleeve in their portfolio.
Yeah, I mean, Josh, I've been telling people there's two stock markets in the United States now. There's a public stock market and a private stock market. All the growth, like if you look at the S&P 500, the top 10 companies, they're all tech companies. These were these companies that we just talked about 15, 20 years ago that are now the top 10 of the S&P. If you want that same experience, you're not getting in the Russell 2000 anymore. People don't go public at $1 billion valuation, and then you get to ride it as an index investor all the way through in the public markets. You got to participate. So I think it's right. I mean, you could argue, is this venture capital? I don't know. I mean, the 20. So the cutoff, I looked before we got on the cutoff from the Russell 2000 to the Russell 1000 this year was 4.6 billion. So I have 30 stocks in my research coverage, 30 pre-IPO stocks. 26 of the 30 would be in the Russell 1000 if they were
Dude,
public
some of these
today.
are mega caps that you had in your list.
Yeah, for sure, Michael. You're right.
So I read somewhere that there are 1,200 plus unicorns currently in the private market. So 1,200 separate companies that have $1 billion valuation or more. And it strikes me that they're in no rush because the equity financing and the ability to get exits is so healthy in these private markets that you really don't have billion-dollar companies with guns to their head. But it wasn't that long ago where like Airbnb almost had an open revolt among its employees. Like if you don't go public this year,
That's right.
right? I don't see any. I mean, I wouldn't know. I guess maybe you would know. But when I look at these names, Anduril, Epic Games, which is Fortnite, Databricks, Rippling. We're hearing about these companies, Figma. We're hearing about these companies year after year. There doesn't seem to be a ton of desperation at any of these firms. The employees seem to get it.
Okay, so Josh, here's the kicker. Last year, perfect example. Last year, Stripe had a whole bunch of employees where they were terming out on their options, and this is where you get like revolts at Airbnb because employees that usually have 10-year terms on their options.
Okay.
So if the company hasn't gone public in 10 years,
so what do I have?
You have these you have these like non-qualified options. You have the huge tax bill if you exercise those. So you got to go public so you can do a cashless exercise, right? And Stripe's in there. They raised $6.5 billion to basically reset their option pool so that they can continue to stay private. So they decided to not go public. Yeah. They would rather stay private, and they raised $6.5 billion in like 4 months' time, right? It was wild. Goldman was big in that deal. So this is the kind of stuff that's happening. You can raise billions of dollars in a very short period of time in the private market. So what is the point of going public, right?
Is it true that they call you the SPV king? Is that true? Is there any truth to that?
I'll take it.
Yeah,
I'll take it.
So, all right. So right now you are helping the wealth management and family office space who have clients that are trying to get into these companies. What would you say the demand side is like? Or I know it's not 2021 anymore.
Yeah.
So, but like I'm sure there are 5 or 10 deals that people are like, I don't care what the valuation is, I just want in. But then there's like another 20 or 30 deals below those that I doubt people are clamoring for buy-in. Okay.
Yeah, I mean, I would say, kind of in simplest terms, if it's on the front page of the Wall Street Journal or Bloomberg, right, people want to buy it. So
it's funny how the private markets have their own Mag 7.
You got it.
It's funny how there are haves and have-nots in the private markets, just like in the S&P. It's like it's always, no matter what. This is a great heuristic. It's always high school.
That's right.
No matter what. So this is high school.
Exactly right.
You got the popular girls and guys, and then everyone else. So
That's
all right.
right.
Aaron, we're going to goodbye you, but I want to say thank you so much for stopping by tonight. If people want to learn more about what Aaron Dillon does for investors, please visit the link in the description below. And Aaron is standing by, ready to talk. Okay.